All right, it's Monday, February 9th, and here is your Monday market update.
Well,
Nikki.
it is a big week this week. There's a lot going on right now as it pertains to housing, treasuries, China, interest rates, job report. Everything is happening this week. So we've got a lot of things. So I'm going to try to break it down piece by piece for you this week with some information about a new and also some information about a new bill that is gone through the Housing Committee and is now being voted on by the U.S. House of Representatives. So we'll get to that. First and foremost, mortgage interest rates. We are seeing the Treasury, or I'm sorry, the 10-year bond hold steady at 4.22, which is wonderful, which means that translates to mortgage interest rates being in the high fives to low sixes. This week, the big thing this week is we are getting the jobs report. So the jobs report, if you remember, talks about jobs creations and it kind of speaks to how healthy the labor market is for the United States. With the BLS jobs report is delayed because of the government shutdown, so we're actually getting it this week. They are estimated 70,000 job creations from the BLS report. However, every expert feels that that is a very high estimate. So what's the big deal? Just because they estimate it high, what does that mean? Well, if we do have a job creation report that's lower than 70,000, what that does is it helps the bond market. And what I mean by helps the bond market is it lowers that 10-year Treasury bond rate, which in turn lowers interest rates. So we're expecting to kind of have a break on interest rates midweek this week if that jobs report ends up being lower than what the estimate is, which chances are it will be. So that's kind of huge. So we could see those mortgage interest rates go down midweek, and that's when we want to capture any locks on our loans for the week is just with that slight downturn, capture those locks and make sure you can get maybe that eighth of a percent lower or even quarter% lower interest rate. So that's kind of the deal there. Also, China made a big announcement this past week that where they advised their people to stop buying US Treasuries. Why that's important to us is right now, and that coincides with this, is that our reliance on foreign countries like China to purchase US Treasuries keeps that economic structure healthy. Well, a big agenda of the Trump administration is to not be dependent on foreign goods, not to be dependent on foreign monies, things of that nature to keep our economy running in the United States. So what he has started to do is he's talked to Scott Bessent, and this has been going on for a while. Talked to Scott Bessent to help deregulate for the banks, which means that post 2008, when the crash happened, banks were used to be buying mortgage-backed securities and treasuries by the handful, by the gobful. And it was a way for them to be able to lend money at lower interest rates, things of that nature. Well, when 2008 happened, all that went away, and banks were then highly regulated, and they could not purchase a certain amount of treasuries, over a certain amount of mortgage-backed securities. That affects the bank's ability to lend. What Trump is saying and what Scott Bessent is trying to do is say, hey, you know what? Let's deregulate that on the bank side so that U.S. banks can purchase those mortgage-backed securities and the U.S. treasuries again, which relieves our dependence on China. So when China comes in and says, stop buying U.S. treasuries or we're not buying U.S. treasuries, the result of that will not affect us as much as it would today. So hopefully with China's announcement, that'll kind of push that agenda forward a little bit faster, which i.e. if banks start purchasing mortgage-backed securities and U.S. treasuries, we get lower interest rates. So a lot of good things that could happen that could push those interest rates lower. That, of course, is a long time from now, or, it takes time to be able to do this and takes time for banks to start purchasing those, but it is headed in that direction. Now, what ceilings and what, the rules are, et cetera, for purchasing and how much is going to be allowed still has yet to be determined, but it'll be more than what is allowed right now. So that's good news. So the big bill right now that is on the US House floor is called the Housing for the 21st Century Act. This is a multifaceted bill that really aims to help with affordable housing, help with home builds faster, and really help with guidelines and flexible lending for different groups of people and different property types. To get specific, a couple of examples is it first and foremost, it aims at helping the builder. So it aims at kind of doing away with a lot of the environmental regulations that are on housing right now, and it kind of relaxes those rules a little bit to help builders get through the process faster of building homes. The second thing it does for builders is they're going to have federal grants for builders for pre-approved housing designs. So basically, you send your housing design in, the Fed approves it and starts issuing grants for you to be able to build these houses so that it speeds up the process and allows you not only to build these houses faster, but at a more affordable price so that the grant money doesn't get passed on. That cost does not get passed on to the consumer. So it basically makes it just as beneficial for a builder to build a home, but comes in with some grant money so that that profit can still be there without having to pass that cost on to the consumer. So that's a huge thing for builders.
Mm.
It also aims at expanding financing for additional property types. So right now, we in the Fannie and Freddie lending or conventional lending world, and even the FHA lending world, we have a lot of restrictions on manufactured housing. We have a lot of restrictions on co-op housing, walk-up apartments, condos that are higher than 4 stories. We have a lot of restrictions on lending to those types of properties. Well, this bill aims at kind of flexing or being more flexible on property types and making allowances for those more unique property types to allow more people to buy homes that are more of these complicated structures or complicated type of loans. So maybe we're building manufactured housing. Maybe we can lend on manufactured housing in a mobile home park. Things of that nature that are going to allow that process to become easier and more affordable for a homeowner. My biggest thing with that is when I go to lend on manufactured housing, it is always a struggle. So I'm really hoping that the guidelines will start to be a little bit more flexible. They'll become a little bit easier to lend on, which will help people, a lot more people be able to afford homes because the cost of a manufactured home is about a third of the cost of a single family home. So you can really see how people could want to build a manufactured home in those circumstances.
Yeah. Well, and as I've been watching some different videos and just educating myself on that, a lot of these new like tiny homes, even
Yeah.
some of the barndominiums and different things that are coming together are considered manufactured homes. So I've
Yes, they do.
heard the stories from some of the consumers of it that, it was difficult. So
It is.
that's
It
interesting because that's such
absolutely.
a new wave of homes and a way to get into home ownership. So that's
It
good that
is, and it's
they.
a cheaper alternative to your traditional single family home. And why wouldn't you want to finance those homes? I mean, from a qualifying purpose, the home is the home. You know what I mean? And manufactured aren't homes aren't the same as they used to be. The manufactured homes of today are a lot better quality, built a lot better, and are more spacious and can act as a single family home in most times. A lot of times on these newer manufactured homes, we as lenders have trouble telling if they're actually manufactured homes or not. So that's kind of a, indicator right there. So the other thing that this bill is going to do is, oh, huge thing. So when we talk about housing assistance programs, Minnesota housing, down payment assistance, things of that nature, a lot of that funding is not only from the state, but a lot of that funding does come from the federal side of things. Well, when you go to qualify for down payment assistance, most of the time, every income source that you have as a borrower has to be considered in the income limit. Not just what we put on the application, but anything that is considered income for that client, including child support, disability, full-time work, part-time work, side jobs, side hustles, anything. Your friend paying you $50 a month for the cell phone. These things are considered income sources for the borrower when it comes to down payment assistance. So what this bill is going to do is it's actually going to allow us to exclude disability income for the income qualifying. So in other words, if you are a veteran, for example, and you work a full-time job and receive VA disability, we can exclude that VA disability in the income maximum to qualify for down payment assistance, but not have to exclude it for qualifying for the debt to income ratio on the loan. So it won't come to play a part in the income maximum that you can earn in order to get the grants and the down payment assistance that is available. That's a huge thing because a lot of people, when we're talking about every single income source, a lot of times it will push people over those income limits and not allow them to qualify for down payment assistance. So that's good.
Yeah.
It'll also Right now, the federal government does give local grants to cities, counties, things of that nature, and the terms and conditions of these grants is oftentimes covered by maybe 1% of the population that could qualify for these grants. So a lot of times they're just sitting out there. And we're talking grants in 25, 35, 45, $50,000 because cities need to use this money because it was granted to them and they need to use it for housing, but the restrictions for lending, I mean, we're talking the box is only this big for people to qualify. Especially in a more affluential city, it really becomes difficult to find a home in that price range to fit the grant requirements. And so the money just sits there or it goes back to the federal government. And so what they're trying to do is they're trying to look at that and say, okay, how can we make this more flexible, qualify more people, and actually use this grant money because it's just sitting there. And so I'm hopeful that the changes that that will make will help, if this bill passes, that the changes that that will make will help make housing, again, more affordable and help the people who are just on the brink of not qualifying or could really use those grant monies to qualify. So the last aspect, so you'll probably end up watching this video 2 or 3 times
Yeah.
to get all the information.
I have a page
But
of notes already.
yeah, exactly. The last aspect is encouraging homeownership investment. And what they mean by that is right now, FHA, for example, you can buy up to a 4 unit property on FHA using 3.5% down. But the limit or the loan limit for those properties is based on 65% of the conventional loan limit. Well, what this does is it actually closes that gap and increases those limits on multifamily properties specifically so that you can, as a homeowner or a first-time home buyer, purchase a multifamily property to encourage people to invest in multifamily homes and become homeowners, become business owners, and really, understand and realize the wealth of real estate. So that's a huge agenda item as well, because oftentimes the benefit of having that FHA loan for a multifamily is the low down payment,
Mhm.
is the 3.5% down. As you get onto the conventional side and you have multifamily properties, the down payment increases for what the minimum is. Lastly, with this homeownership investment kind of category, they are going to be doing some revisions to rural housing lending or USDA lending. So right now, USDA lending is 100% financing for people who purchase properties in rural areas. And it is done by the census tract. Well, because the census tract, these what's considered rural is lower on the census tract than what should be. They're changing the maps, changing the limits on the census tract to try to include more areas in that rural housing category. So for right now, there's a city in Minnesota called Jordan, Minnesota. Half of the city is in the rural housing and half of the city is not, which makes no sense because of where the census tract lies. So what they're trying to do is kind of clear up some of those areas where it should be considered rural housing and maybe isn't for whatever reason, and kind of adjust those maps and adjust those track numbers. Also, with that goes along, they're also starting to write and run programs for rural housing where you can get renovation loans for rural housing. In other words, you go out to a farmstead, the house is kind of, a little bit run down, it's got some issues on it. Well, you can't lend on that in rural housing. What this does is it can provide a way for you to be able to lend for rural housing with renovation money, similar to what's called a 203K or a renovation loan for FHA lending. So there's going to be a lot of changes coming down with this bill. It'll be interesting to see how Fannie and Freddie and Ginny handle it when it comes to just different adjustments. I'm excited to see how the builders are going to handle it. And I'm also excited to see how these unique property types are going to be handled from a financing standpoint because, obviously as people in the industry, we are all firm believers in home ownership and the possibility of home ownership. So being able to open up those guidelines, being able to open up the lending flexibility, I think will really help a lot.
Yeah, that's incredible. So when, timing wise, what are we looking at?
Well, it's on the House floor right now, which means
Okay.
they're going to be voting, I think it's the end of this week actually,
Okay.
for the first time, for the first vote, and then it'll go to obviously to the Senate and have to pass by a majority there. But yeah, I mean, there's some really good things in it. There are some really positive things that could be great for the housing industry.
Wow. And I'm just thinking from a real estate agent side of things, it's like if you know your database, I call it a data bank because there's money sitting in there. And if you have a really good grasp on the people that either you've talked with or are waiting or not right or not ready or didn't qualify, I mean, this will open up once
Yeah.
it's passed so much opportunity and it's really exciting. It's like a
Yeah.
whole new game.
Yeah, think about first-time home buyers who's saying my budget is $1,800 a month.
Yeah.
Well, the only way that budget was working was in 2020 and 2021 when the interest rates were at 2 and 3%.
Mhm.
This is now going, okay, $1,800, great. Let's find you a manufactured home. Let's find you a, some, condo or some co-op or whatever it is that is affordable to you, but gives you that power of home ownership and builds that wealth for you.
How incredible. And the builders and just keeping
Yeah.
that industry going, because I know, yeah, just with the grants and what that looks like. I mean, just if this bill passed, I think we have content for our Monday market updates for the next half a year,
Oh,
just getting through
100%.
all of
Yes,
this.
exactly. Exactly. I mean, I'm just like
Oh,
majorly just doing an overview of the different categories of the loan and the different sections and just giving you a couple pointers. I mean, there is so much into this bill that is really puts an effort forth to help with the housing crisis that we're having. I mean, I can only imagine like for people who want to live up, in rural areas or who want to take advantage of that and don't have to provide down payment and then can renovate the home as well to get
mhm.
it up to par where it needs to be, that's huge.
Yes, yes, absolutely. So, for the people that might be listening on the podcast or taking notes, wherever, whatever platform you're on, what is your phone number, Nikki? So they can text you or call you because if you don't have questions, you should.
You should,
If
yeah,
something should be
exactly.
sparking, you're like, oh my
There's a
gosh,
lot happening.
I need to know about this or I want to know about that. How
Sure.
can they get a hold of you immediately to kind of
Sure. You
take
can
it to
reach
the
me at 952-484-1584. You can also email me at Nikki, Nikki, at Kevnick, KEVNIK group.com, or you can find me on socials at Mortgages from MN to AZ.
That's amazing. Oh my gosh, I can't wait. This
I
is
know.
it does. It
I'm
feels like a rebirth.
hopeful.
Like,
I'm hopeful it'll pass.
yes.
I don't doubt some version of it will pass, but it's just I'm hoping we get a lot of the good stuff, the whole kit and caboodle, but a lot of the good stuff in there I'm really hoping for.
Oh my gosh, this is phenomenal. Well, so good. So much information. Again, watch this again, listen to this again. If you didn't take a page of notes, get your paper out and a pen out and do it. Call Nikki, text Nikki, find her on social and get a plan together so that when this
Absolutely.
hits, you're ready and you can be
Exactly.
getting back into contact with those clients or those leads or prospects or customers that weren't able to do so or whoever's coming to mind that you know you should reach out to. It's a phenomenal way to show up and serve in our industry. So, wow.
Absolutely.
Awesome.
Yeah,
Thank you so much, Nikki. I can't wait for
absolutely.
next week and all the weeks after that. As usual, this was phenomenal. Appreciate you and your time, and we'll see you all next week.
All right. Bye, everyone.
Bye.